The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 20th day of December. My pleasure to be here, noon until 1 p.m. 877-927-6648 is the number to call. And let's just look at this Dow. We've got the Dow up 6. It spikes almost 100 points early on. Then it pulls back, and it's now only up 5. I'm looking right now on the left side is the E-mini. And it's so fascinating that the 2698 round number high that was made right here on the 120-minute chart, first time, was 10 o'clock on the 18th, retests it again 2 bars later, pulls back just a little bit, walks the 9-period exponential moving average, this is that black line. The MACD plummets, stochastic falls sharply, but this still goes on to retest at 2698 yet again, twice in fact. Oh, I should actually say 4 out of 3 120-minute bars. Amazing. That's on the 19th. That's yesterday, 4 o'clock. Again at 6 o'clock. And then at 10 o'clock. And now we're into the 20th. And there was a pullback to 2682.50, a spike to the upside. Did I correct that? 93, 93, 25. Yeah, to a peak B minus. Why? Because it spikes to 2695 level and then immediately plummets down to the low of the day. And the low of the day is right there at 2679. I'm going to make it real clear. All the good news is actually out. You just need the signing of the bill. What's the best case scenario? This is really Goldilocks. I mean, you got Goldilocks? You got everything going here. How much more good news? Well, I think there's going to be a little hiatus before we start talking about infrastructure. So this has to settle. So my guess is that we are very close to some kind of a consolidation. We just don't know whether there's going to be a sudden spike to the upside. President comes out, says, sign the bill, all that stuff. But as I'm seeing it right now, look at the tiredness of this market. The MACD is good in the daily. Stochastic's very good at 90%. The unbalanced volumes pull back. But you keep bumping into this inside track resistance area. Now you've had so far 3 days. The day's young. Anything can happen. But it's 2 days, today being the third, that there's a parallel high that hasn't been broken. So this is going to be very interesting. And the candle in the weekly chart says, hey, this is Wednesday. You've got 2.5 days to go. We've just had 2.5 days to go. Who knows where this candle could be? But if this is a doji or a down candle at the close on Friday, I suspect that we're going to see very limited upside, and we'll start to see the probing of the downside support. All right, overview done. Let's get to the nitty-gritties. The Dow, 24,876 was the high on the 18th. It hasn't been able to break that for 2 days. Day is young. Anything can happen. MACD is good, but starting to show a declining histogram. Still very positive, but declining. Stochastic, very strong at 90%, also declining a little bit. Not as strong as it was at the peak D back on the 4th of December at 24,534. And the unbalanced volume is just reversed down. So what am I looking at? A little bit above 24,876 is possible. Now, I've said this for a long time. I said 22,000 in the Dow should be resistance. Oh, no, 23,000. Whoops, like a rocket ship, it goes through. Then I said, 24,000. Whoosh, all the way through. Now I'm saying 24,900s is probably going to be a very strong resistance area. But in the meantime, back in the ranch, we'll see what happens. Everything I'm looking at suggests that there are a lot of very important overbought situations in key stocks and indices. Certainly you can go higher, but I think this is where it becomes extremely selective. Steels are doing nicely. There are a bunch of groups that are doing nicely. We'll talk about that as we move on. So Parameters to watch by Friday's close, 4 o'clock Friday. If the Dow is under 24,000, I'd even say 550. That's 200 points lower. That's going to be the start of the consolidation. Even there's some choppiness to the upside, then I think lower lows and lower highs. And if there's a break and I'm completely wrong and we're trading at 25,100, all I can say is, wow, we still have only long positions. Trying to get that short position back again. We'll attempt it, and usually if it doesn't work for 1 or 2 times, we take a tiny % loss. Third time is the one that really you put a lot of emphasis on the third one if you're convinced enough to try 3 times. So in the meantime, back at the ranch, we're going to go to the S&P. The SPX. It's fading more than the Dow. It's down 59 cents at 26.80. It too has made lower highs. It made a high on the 18th of December at 26.94.97. We'll watch this closely. Peak E for the peak E/B for the daily chart. Leg G/C for the weekly chart. Let me get rid of this. Don't need it right now. 120-minute chart. Leg D in the monthly. Weekly and monthly charts are really strong technically. Even the daily's got some strength. I do see a little sign of weakness. It's price that I'm looking at. A close on a daily basis between now and Friday below 26.70 to 26.68 would be the sign that I'm looking for to say, okay, chop, chop, chop coming in. There we go. QQQ. Tried to rally today, made a high of 158.77 3 days ago. Hasn't been able to pierce that. E/A has all the look of an E at this moment, but the moment it takes at 158, not 77, if the moment it goes to 159, I have to concede, we could have a chop chop to the upside in the Qs into year's end. But in the meantime, I think this is the test. This candle right here today is a big test. Let's see where it closes. Weekly leg D, monthly leg C, major positive for the monthly, even if you have a 12-point decline, an 8 to 12% decline. So for the monthly is very strong. IWM, a lot of talk about the IWM amongst subscribers and folks who understand the Chapman wave methodology. What is the wave count in the weekly? Let's get through everything else. And if I have time at the end, there's no need to rush into that. I'll do that later on. It needs a leg D above 155.41 and it's up 32 cents today. Not a great looking chart right now. Technicals are actually very poor. It's got the U-shaped formation and that should test the upside on the left. We'll see. So in the meantime, back at the range, the parameters to watch by Friday, if the IWM Russell 2000 is below 152, it's at 153.40 right now. That's a negative. I want you to get to gold. Gold is having quite a nice day. It's just okay, up $4 at 1268.2. I have to tell you, for a sector to have made a low on the 12th of in the daily chart on the 12th of December, in this case at 1238, and to be only 30 points higher is really very weak action. But what is strong is the fact that every single day on every pullback, it's managed to squeak to a new higher high. So there's a little conflict here. The MACD is really strong. I'm sorry, made a very strong turnaround, but still very weak in terms of its percentage level. And the stochastic's okay at 41%. Maybe I'll talk a little bit more about this because so many people have asked me about gold. I'll be right back. Basil Chapman. Dow's up a whopping 10 points. S&P's up 21 cents. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're back. So we're looking at gold. This is making it real simple. Gold has managed to move to higher highs every single day for 6 sessions. It hasn't done that in a long time. Not consecutively. It's moved higher. 1, 2, 3, 4, and then it took a rest. Yeah, 6 sessions in a row. That is good. I'm just a little disappointed that from the 1239 area to the 70-ish area, it's used up a lot of the technicals. I don't see any breakout candle. Maybe that's coming, maybe by the end of the day or tomorrow. And that's really what I need to say. Okay, that's very good action. What isn't good action? Well, first of all, let me do silver right here. Silver is, this isn't a leg B. It's a slightly different chart formation. It's actually a little bit more positive than gold. I actually liked it because silver was telling us before that gold couldn't go anywhere if it was so weak. So this is at least a good sign. Here's what I'm looking at. When I look at the dollar, and I think of the huge move down from the 103s to the 91 area, and then this bounce. This is a very weak bounce, just going to just under 94, right, touching 94 from 91s, and now trading at 93.27. But there are a couple of things that are going on that, at least for me, says don't rule out the dollar just yet, and we'll be looking at that in a moment. But I just wanted to show it, and then just real quickly, I want you to go EUR USD. Then we've got a caller, which will help me look at the dollar. Oh, we're looking at something else. Okay, so Euro is acting very nicely here. It's above the 9-period moving average, improving the weekly chart. That's a good sign at 1.1876, up 0.03. And the USD JPY earlier was holding okay. Now it is, now it's quite strong. You know, I'll talk about the currencies in a moment because there's a real mixed picture and it's going to need a breakout to get out of the trading band. And that's basically what we're in. Let's go to Jerry in the Back Bay. Jerry, how are you?
Good. How are you? I'm just following up on, at the meeting we talked about Brent oil.
Yes.
It's just an astoundingly different pattern. The symbol on one service is dollar, BRENT. I don't know if that works for your service.
Correct. Okay, so I'm going to ask somebody in the end. That won't work for me. Brent, BR. Let me just see if I get it. Someone in the den, can you just post me the Brent symbol. Z knows. I don't know if Z's in the den right now. So, you know what I'll do? Give me a second. Give me your explanation of what's going on. It gives me a moment here in which to check it out. So I'll find it. Funds futures. There we go. Brent. Brent CY. Okay, good. So let me go to this. Cancel. Oh, I didn't realize it was CY. Let's go to CY. Incorrect symbol. Oh, that was a mistake. Oh, BZ.
No.
BZ. I've got it. Brent is BZ. BZ. Let's go to B.
Hello.
Yeah, I'm there. So, Jerry, tell me what you're looking at. Here we go. Hello, Jerry? Uh-oh. What happened? Jerry, if you're listening, call back. I wanted to speak to you about this. BZ. Print. BO. Okay, maybe it's BO. Oh, this is terrible. This is the only one that I can never remember which one it is. So Brent, let me just see Brent. No, I don't want to guess. So what I want you to do is just to talk about oil. And what Jerry was saying the other night at the meeting, Jerry was there. And as soon as I have Jerry back. Okay, Jerry, you're back.
Yes. You know, I found another way of looking at it. There's a fund called BNO, symbol BNO.
Okay. Perfect. That's exactly good.
It's a fund of Brent oil.
Yes,
so it
this
gives
is
the
the
same
US
pattern.
Brent oil. So it's the same as USO, except this one is the BNO. Very good. Let me write this down in my book so that I've got it. BNO is Brent ETN. Got it. So what you were saying is that Brent has a different chart formation than the USO, which is the crude oil. So folks, you're looking here, the left is the daily, on the right is, in the middle is the weekly, on the right is the monthly, which has broken to new all-time highs. This is in fact, a new recovery high. This is in leg C. So let me just do quickly an up arrow, and now I'm going to go peak A, peak B, leg C, that's what it's in. Now I'm going to do the weekly, if you don't mind. So tell me your thesis as I'm doing the charting. I'm listening. Jerry? Hello, you there? Jerry, I think it's you have to. Yeah, it's the right. You have to put your TV down. I can hear you, but I'm getting an echo. So I want to hear this. I've been waiting to hear it. Jerry, I'm getting an acoustic rebound from the computer. So if you're talking on your phone, get the other one off and just go back to the phone. Hello, Jerry. Hello? Aye. So maybe we'll get Jerry back again. I want to hear what he said. What he was saying the other night, and I couldn't do it because I didn't have the chart, was that there's a difference, there's a disparity between the very strong BNO, which is the United States Brent oil fund. Look, it's almost at recovery highs. Very good candle at leg E on the weekly chart. Week of the 15th of December at 17.52. And already this week, we've got a high somewhere in the 17.39.
What it is there's two.
Yes. Keep going. Jerry? I don't know what's going on with your phone. Oh, this is terrible. Jerry, you keep cutting out. And I'm sorry about that. There's a real problem. But I'm going to talk about what you discussed, and you tell me if I'm wrong. What Jerry was saying is that the USO crude oil had a very different chart pattern to the Brent. Brent, was that New York Brent or something?
Yeah. The reason is that this oil is this.
Yep. Tell me.
Yeah, this oil is a worldwide marker that's selling $7 above the
crude oil.
The WTI crude oil. So, and much of the world uses this, and our new shale oil sells to the Brent market. It's very high quality. So
okay.
I don't really understand why it is, but I think it's significant, and it supports the whole oil ecosystem.
So, Jerry, just in case you cut out again, I'm making a note of this. We have some folks right here in the den and on Tiger here at the hosts who are really very knowledgeable about the differences. I'm also going to ask Andy Hecht, and you know what I'm going to ask you to do? Could you, I don't know if you have time, could you call Andy Hecht tomorrow afternoon, the 5 o'clock hour? And he does these, and could you ask him that same question? All I can say is that I do see it exactly. I don't know the implications. I'm going to try to find them out. Would you be able to ask Andy Hecht the same question tomorrow afternoon?
Great.
Okay, because I can only tell you there is a difference, and I can explain, but not why. So thanks so much for calling, Joe.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. A couple of quick things. Jerry, what Matt in the Den said is that it's really point of delivery more than anything. Crude oil WTI plus West Texas Intermediary delivered in Cushing. Okay. So my thinking is that if I look at the chart formations, the chart is saying something, you know, keep your eye on the right side, you know, the middle and the right side chart. That's the weekly chart of BNO. And if you look at the USO, look at this. There's the pattern here is a little, the last couple of weeks have been a little different, but crude oil has had a really good run. it has not made the new recovery high. In fact, I can tell now, I've had someone send me a chart, and for maybe 3 years saying, could be more, my chart of the USO is different to his chart of crude oil. My chart says that the USO has not made a new recovery high above the high that was made back in June of 2016. Excuse me. His chart does say that. And in fact, it says it's in leg C. Now I can see why, because he's looking at a chart that pretty much has, not NBO, but BNO, has the chart pattern of the, this is of the Brent, United States Brent, and that's what he's looking at. Finally, I've solved it. Jerry, I think you've solved the big puzzle for me, but it doesn't change too much in what I'm looking at. I think that matters now that it's the point of delivery. My thinking is that they move in the same parallel track most of the time, and that you're looking at, there is a discrepancy, and that discrepancy itself is something that maybe someone like an Andy Hecht, who already studies these things in tremendous details, traded these things in big quantities. I think that Andy's the one to speak to. So I hope that helps you there. And I'd like to hear the results, so I'm going to be listening. Now, a couple of things that I'm also looking at here is, look at this. This is the TLT. The TLT plunged to the 200 period simple moving average of the 124.55 through the key 200 support in the 125s and made a peak E in the Chapman wave, a couple, this is what I call the drop bucket formation, like a backhoe has the bucket and then it opens it up and all the stuff just falls right out. It's exactly what happened here. This is a very interesting sign because look at the difference. You've got, for the first time now in weeks, months, you've got the 30-year T-note, the T-bond yield, the TYX, this white line, skyrocketing up. It's up 35 cents today, 28.56 after a very strong yesterday. Now you've got leg C in the 10-year TNX. This is really important. This is the housing. This is where rates are, the mortgage rates are really attracted to, right here. But you've got the 5-year that was leading all the way. So this is very interesting. The 5-year right now is at 22.20. The 10-year is at 24.75. Remember, 2.475. I'm calling it 24.75. And 28.56 is the 30-year T-bond yield. So those T-note yields are climbing, and they're getting closer and closer to the 30-year, and the trend is the same. Before, the trend was very different. You had the 5-year leading the 10, and the 10-year was weak, but not as weak as the 30-year. Now they're all moving in concert. This is going to be a very important aspect that we look at. Just quickly, if we look at the HGX, it's up $1.10 today, 341.07. I think there was a good housing report, but it's under the 347.70 high. I'm watching housing real closely, but wood, the iShares Global Timber and Forestry ETF, actually spiked higher to an all-time high. So that's going to be very interesting. I just want to show you this chart. This is the Johannesburg Stock Exchange, almost at an all-time high at 413. This is the Dow Jones South African Stock Index. The previous high was back in 2015 at 425.60, and peak D, that was a peak D, and peak F was at 426. That was, I think that must be an all-time high. So this is going to be very interesting. World markets are running very strongly. So what happens next? So I want you to do just two things. Show you that high-grade copper has had another big spike to the upside. That is a huge move in copper in a single leg up. It's broken all that resistance on the left side. It seems headed towards the high that was made back at peak E on the week of the 20th of October, around about the 3.2825 area. It's at 3.19 right now. Excellent, excellent action. So that to me, so now I've got a bunch of mixed signals. Oh, here we got. Let me just go to this. Jerry, if you're listening, Z and the Dan, who actually trades these all the time, says, WTI, crude oil futures, trader on NYMEX, and Brent, CB futures, trader on ICE, are virtually the same grade of crude oil. Crude oil composition varies widely depending on source. Key difference between the two is location. Okay, that's what Matt said. So the location where physical delivery of oil to owner of the futures contract, typically a refinery or a pipeline operator. WTI contract is deliverable at Cushing, that's Oklahoma, I guess, only. Brent contract is deliverable at any global location agreed to by buyer and seller. This is Z talking, John in the den, I always base my oil market analysis upon Brent contract first. The delivery constraints WTI crude oil is subject to often obscures actual supply-demand factors governing the oil market, a global market. I think, John, you've got, as this is John in the Back Bay, you in that summary, you have got a synopsis, just capsulized exactly what is the reference that we're looking at. So it's not a reference in the sense that you've got contango or something like that, where the outer futures are giving indications that the near-term futures are not doing, and that's really a good clue to an up or down, whatever it is you're looking at. This is same to same, just different locations. Therefore, they traded on different markets. So let's think of it that way. I'd hesitate to say it's like the Dow and the S&P, but think of it as the same, not different, but the same instrument, just being traded in different ways. Okay, so I think that's clear. Now I want to just go through this because I think for the rest of the session I got a huge bunch of questions coming in, emails and texts. I'm just going to go through this because it's just so important right now. One of the reasons. Let me just have a drink of water. Good. Let's go back to the Dow. One of the reasons why I have been focusing on building up a cash position for subscribers, one of the reasons why we're trying to be still as selective as possible, trying to find the areas that are immune to what's going on now market-wise, because they are in other areas, at least for the moment. They could become less immune even by the end of the day. Not based on the weekly or the monthly charts, but based on the daily charts. I have a lot of information at this time that I'd like to go through just in a very slow motion way. I just want to look at it, sort of talk it out with you to say, this is what I'm looking at. I know where I'm going to be wrong. I've got specific areas that if taken out, I am dead wrong. But I'd like to look at the potential for all the good news being out. Now we could maybe chop technically for a little bit, but I'm a little afraid of what's coming up to the downside.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so let's just do this. I want to just run through these things. I mean, I do a quick synopsis of kind of what I'm looking at here. So the Dow's down 4, big deal, 24,750, but it's just these candles here that are a little bit of a worry, but you can understand that because there's a bill being passed. It's what happens after the bill. Do you sell the news? So you sell the news and then the market just comes roaring back and goes to 25,000? So let's look at different scenarios. First of all, let's just go through this. Look, Amazon, at this particular point, Amazon not acting all that well for a company that should be taking away business from just about everybody. I think they're going to be impacted, number one. Number two is, I know from my own experience that out of 2 packages that I sent via Amazon, Monday a week ago, Wednesday, the 1 packet arrived at this one address, and the same address should have got the 2nd package. To this day, it hasn't arrived yet. And I've been on the phone with them almost every day. They've promised it'll be next day. They know where it is. It's all there, ready to be delivered. And it was delivered once, but it was a different, either the post office did it or UPS didn't do it. I don't know what happened. But instead of just leaving it like they were supposed to, they left a note to say they tried to deliver it. And that was Friday. And every day since then, I've been discussing it with somebody on the phone for 30 minutes or more. Very nice people, just, oh, you're sorry, we'll give you this and we'll give you that. I'm not interested. I want that delivery, and it hasn't been delivered. So I suspect that Amazon is also going to have tremendous sales, but maybe overall the costs of business is going to maybe impact them because of the discounts and the favors they have to give people now because of non-deliveries. I'm hearing this a lot about non-deliveries. So I'm looking at this and I'm suggesting to you that Amazon, if at 1180, it can't just close slightly above 1213, the all-time high. If Amazon on January the 13th, 14th, 15th, around there, is up in the 1235, 1240 area, that is extremely positive, and that's going to really help the QQQ. But if it's not, if it's down below 1140, or even lower, 1120. I think that this whole holiday season thing is probably done, and that's going to impact the Macy's of the world. Macy's made a peak F-top in the daily, a great move from the 17 level to the almost 27 levels, 9 points it makes. Now it's a little overdone. So I'm going to be looking at the RTH index for a number of reasons. The RTH index is a G/C, just trying to make a D, hasn't. A huge move. Just look at this, like a single leg to the upside. So what happens in January for the retail, the market vectors retail index, I think is going to be really important. a break, another break to the from 91.23 where it's now at into the 94s. I'm wrong. This is just to the moon. That's what we're looking at in everything. I just don't think we're ready for that right now. I think we're ready for just a digestive phase. It might be worse, but I'm just saying at least a digestive phase. If you look at the IYT, gap up to a leg D, a very quick peak D made on the in Chapman wave on the 4th of December, pulls back, holds the 9-period moving average, and does a quick gray A, E/B, F/C, boom, D. And you've got this D candle right here. Good technicals. Weekly chart is extended, but still also in a D, and the monthly chart is in an E. And technically strong. Weekly is technically strong. Daily is technically very strong. Therefore, that tells me that it's going to be price movement. Why? To get the MACD to cross negative at this particular point, I would suggest to you that it's going to take a much deeper move below the low of 186 that was made just 4 days ago. In fact, probably you'd have to go under this doji candle of the 6, under 183. And then you're going to get a MACD that's very negative, and maybe you'll get the stochastic down below 80%. So it's going to take a series of bumps to the downside to get the transportation index negative. Let's go for now, let's go to the S&P. The S&P, MACD is very strong, stochastics at 89%, crossing a little bit negative here. Not a great chart pattern over since the gap up. It's filled the gap from 4 days ago, but still technically good in the daily chart, strong in the weekly chart, very strong in the monthly chart. It's going to take for the S&P to pull back from the 2680 level that it's at now. I would suggest to you it has to go under 2640. That's 400 Dow points. That is a lot. But we've got a couple of little disruptors going on right now. And if you look at the TNX in leg C, a very strong move. This is what I'm watching on the TNX. Is it possible that after 20 years or 3 years, that this major resistance line right here, going back to, let's take to the green and the red line. So this is Chapman wave inside track, huge down channel in the 10-year Treasury note interest rate index, makes a high at 102.30 back in October of 87. Let me just explain a little bit. 102.30 is 10.3%. It was actually more than that because it's been smoothed out. But yes, look at this unbelievable channel. Even went to a peak D once and then pulled back right then, June of 2007. And then it couldn't even get to that back at the peak D high that was made around about January of 2013. Now all of a sudden you're getting something that says, hey, wait a minute, the 9-period exponential moving average is actually running quite sharply. The MACD is holding pretty well. Stochastic, it's lagging, but it has got a move that can go from 75% in the monthly higher. So this is going to be very important. Why? Because all you need to do is to go into the 26, 27 area, 2 points higher. Doesn't sound like much, but your interest rates, when they really get moving, like on the downside, they can really move. But that's what it would take. And that, I think, would be a huge disruptor in terms of interest rates, the real estate market. I was speaking to a real estate agent over the weekend, and she said, you know, I'm worried. She said, this in the states that are going to be impacted negatively with the tax reform, she said, I'm kind of worried about what's going to be. But anyway, let's see what happens. So far, it's just in this trading band, gone to a leg C daily, leg C weekly, watching it closely. So then I want you to get out the way. And then I want you to talk about the XLF. A lot of questions about the XLF. XLF should be screaming right now. Wait, rates are going higher? Wasn't it that rates go higher, banks improve the income? That's a real issue. This is down. It was only up 3 cents. It's off the low. Big question, can I show the TNX chart, very long-term again? Sure can. TNX.X, here we go. All right, what's the question? So this gray line right here is more like, we'd call it a short term, even though it goes back to 2008. That's the resistance level that we're looking at, and we're testing it right now. The red one goes way back to, what was it, goodness, what did I say it was? 1987, yeah, to the 87 crash high. And that's this part here. The outside, the green, would be a trend line that takes in the most recent top. So we haven't broken. That's way up there at about 28.03, 2.83. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, Steve Rhodes comes up. I think Dave's still on vacation. And then Tom O'Brien. So let's look at this. I was asking I had an email, would I show the full month? Because it was being covered by the 120-minute chart. Yeah, this is the full month. Remember, we're still looking at the leg, body, neck, stalk leg formation. This is the neck. And one of the reasons why we're trying as long as possible to keep an intermediate-term long position from the 22,000 to 90 level is because this is still a very powerful move to the upside. I'm saying shorter term, that we could get a pullback, and it would be a pullback that in some ways will be a little scary because it might be speed and not just price. My thinking right now is that there are so many people still wanting to buy that at least going into early to the end of December, you should have some support on pullbacks. But I'm making it real clear. Dow 25,000 and holding for 1 week, that's just another story entirely. Dow 24,300 and holding, that's another story. That's the story of a respite, taking a little bit of a breather. So, okay. Now, a couple of questions that I had is KRE regionals. We spent a little time with us at the meetup that I was the guest speaker at the other day. And what I was saying is that the XLF is really, at this point, still the boss. The KRE, the regional S&P financials, I think that that's lagging, but it's still doing about the same as the XLF. So I got a feeling that sometime, maybe February or March, KRE, that's going to be the test. Is it able to really start to break out because there are loans and all sorts of other things going on? So in the meantime, it must, at 59.29, it breaks out above 61.30, and in the daily chart below 57.50, that'd be a problem. Okay, now I've got just a moment to go. For the people who did my webinar a week ago Friday, I've sent you out a couple of charts to look at, just exactly what we were doing. I followed up on that, like I said I would, and I will be sending you something else over the next few days because I said I would keep up with things, and I've tried to answer questions as they've come up. So make it real clear. I'm not even talking about the VIX right now. If the Dow punches really quickly because of the bill and holds above the high of the 18th at 24,890s, that's really good. If it pulls back sharply below 24,670, it says, uh-oh, be careful short term. Have a great day. Stay tuned for Steve. I will be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.